Welcome to the Compliance 911 Show, a no-nonsense podcast discussing hot topics for today's busy compliance professional. It's everything you wanted to know about regulatory compliance, but we're afraid to ask. And now, here are your hosts, Dean Stockford of M&M Consulting and Len Suzio of Geodata Vision.
Good morning, Dean. Great to see you again. So what great topic do you bring to the discussion today?
Hi, Len. It's great to see you as well, and welcome back from your time off. It's always a pleasure to see you. So I wanted to focus, in my last episode, I focused on cyber and fraud risk. And again, I'm not the expert on that, but certainly pointed out some risks that we've been seeing. So today I thought I would expand that a little bit and speak directly to the compliance professionals out there regarding compliance management systems in the landscape of shaped excessive fraud and corruption and cyber attacks and data and AI and enhanced third-party risk and uncertainty around deregulation. I thought it'd be a great topic.
I agree. I think it's a perfect topic in light of all the uncertainty about the changing regulatory situation, enhanced fraud, and elevated risk around artificial intelligence.
We'll agree. Well, let me jump in. So at its core, compliance management is in banking actually ensures that the financial institution are following the rules, the local laws, the federal laws, the regulations, internal policies, procedures, et cetera, et cetera. But it's more than just checking off boxes with a checklist. Compliance and risk management professionals are facing a daunting list of challenges and concerns as they enter 2026. The growing creation of tech-enabled fraud represents a frightening threat overall, and again, plays into my previous podcast that I did. But compounding the problem is the fact that many compliance officers at small and mid-sized banks and credit unions and fintech firms and other actual financial service organizations often lack access to advanced fraud prevention tools and detection technology and resources. So obviously it puts them in a real tough spot. So this presents real challenges for institutions and in my opinion highlights the need for, a robust compliance risk assessment and overall compliance management system enhancements, to say the least.
I couldn't agree with you more, Dean. The role of compliance continues to evolve. And faced with some major topics over the last several years with fraud, artificial intelligence, CRA modernization, Dodd-Frank Section 1071, and of course, redlining concerns, it's not time for compliance officers to be complacent officers.
That's right, Len. You're spot on. The role of the compliance continues to evolve, and you certainly don't want to be complacent as you indicate. In my experience, we're replacing general auditors, or compliance folks, I should say, with high-level expertise, and this can be costly. However, it's imperative to have a strong bench, with knowledge, obviously. In most cases, financial institutions need to transform the role of the compliance departments from that of what we used to see as more of an advisory role to one that puts more emphasis on active risk management and monitoring overall for the institution. This means expanding beyond offering advice on statutory rules, regulations, and laws, and becoming an active participant and an owner of risk to provide an independent oversight of that control environment.
Okay, Dean, so can you provide some specifics on how the compliance role is expanding or should be expanded?
Yeah, absolutely. We're seeing the responsibilities expanding swiftly, taking more practical approach on applicable laws, rules, regulations across all business lines and processes, and how these would translate into operations. This focuses on what is feasible and effective in the current environment. So real-time monitoring is just really, really interesting. Enhancing standards around risk materiality. And, this kind of goes back to the tone at the top, the risk appetite of the financial institution. Risk measurement and methodology by enhancing the risk assessment process to identify, evaluate, mitigate risk in various environments, ensuring informed decision-making. And that's one area that we see often. Regulators start with the risk assessment. So the level of detail, the depth, the breadth that can go into that is imperative. Develop and enforce standards for monitoring. It just goes beyond your internal audit. This is early on. This is done on behalf of management. You have to monitor to make sure you're complying and that your controls are effective. It includes root cause analysis and enhanced tracking to ensure that root cause is addressed as opposed to just identifying a single issue or event and moving on. More robust training programs based on job type and work environment, and ensure these expectations are embedded within job descriptions, as regulators tend to flock to your job description to make sure that there is something indicated. Enhance tools and processes for frontline staff to ensure a much higher level of compliance. Greater oversight of customer relationships, transactions, and products with predefined risk-based rules. Again, trying to establish some sort of baseline of risk so that we know, okay, something doesn't look right, doesn't pass the sniff test, or they deviated from those norms. More frequent monitoring and audit on the overall state of compliance, and of course, continuous evaluation of risk culture, strengths, and weaknesses. These are just a few examples, but it's extremely important for all staff, and in particular your compliance professionals, to have a thorough understanding of the elements of a strong risk culture. Timely information sharing, tracking, and rapid elevation, for emerging issues is an absolute must.
Dean, this is great information, and I have personally seen the role of compliance change significantly over the last several years. So, if you were a compliance officer at a bank, what first steps would you take?
Well, you always have great questions, and has certainly been a while since I've sat in that particular seat, I guess you could say, or the compliance role. But as I mentioned, understanding risk culture is critical in development of monitoring systems. So the first step would be an internal survey of sorts, I think, which would assist in developing that deeper understanding of some of the risk nuances across the entire organization and focal points for establishing that monitoring program. Second, I would identify all risk, review, and when necessary, enhance those mitigating controls. Again, we're in the risk business. We're going to take risk, but we have to make sure that we've applied appropriate risk mitigation. So ensure that all risks are aligned with risk appetite and meet with stakeholders to ensure that appropriate monitoring controls are in place with detailed training. I mean, this is just a quick overview of some of the initial steps, but understanding the organizational structure, appetite, and overall culture is key in developing a robust compliance management system. And I think, Len, I've heard you say this numerous times when we talk about CRA, what's the context? Or when we talk about fair lending, what's the context? So it is important for them, compliance professionals, to understand that overall culture in order to establish an effective or robust compliance system, as I indicated.
Great information, Dean. I hope you'll allow me one more question. What do
Certainly.
you think the most significant compliance risk areas of concern are for 2026?
Well, if I was a compliance officer, I'd probably run for the hills because
Mm, mm,
I don't think
mm.
there's any one thing that will impact them. I think it's a myriad of things that certainly is going to have an effect on compliance folks over the next year and beyond. But it is a great question, and these are strictly my opinion, but in no particular order. But certainly, as I've mentioned before, and in my last podcast, data privacy, cybersecurity risk, which obviously fraud comes into play there as well, is huge. Strengthening of your AML and CTF compliance. I know that, again, in the BSA area, they're talking about modifying some of the thresholds for reporting, but we certainly need to enhance our overall oversight, suspicious activity monitoring, and fraud monitoring tools. Digital banking and evolving regulatory changes that around fraud, security, and data protection, as I just mentioned. Of course, the big one, AI-related compliance risks, because there's certainly great things about AI, but there are also significant red flags and risks out there and prohibited practices that, quite frankly, we need to be aware of so that we can provide appropriate risk mitigation. Third party risk. And again, all of the things we just spoke about as it relates to the third party, we certainly have to elevate our vendor due diligence. Regulatory changes in fragmentation, another big one. And expense for a top tier compliance talent. I mean, that's, I think we've all kind of experienced that, and our clients have experienced that on many, many levels is, you want the best of the best. And so I think that that will be a challenge into 2026 and into 2027.
Dean, thank you for sharing your thoughts and for your invaluable and informative comments today. This is Len Suzio with Geodata Vision.
And this is Dean Stockford from M&M Consulting saying thank you for tuning in to today's discussion. Please let us know of any additional topics you'd like to hear in future episodes.
Thanks for listening to the Compliance 911 Show. If you like the podcast, be sure to subscribe so you don't miss an episode. While you're at it, please give us a like and review to help others find the show. As always, links are in the show notes, and you can always find us online at compliance911show.com. Follow M&M Consulting and Geodata Vision on LinkedIn for all the latest news and information on compliance hot topics.